Welcome to Lithium-ion Rocks, Season 1 Finale. That intro you just heard was actually a trailer for an upcoming Mad Men season, but I chose to use it as the end of Season 1. As a lithium Mad Men myself, and there are other Mad Men in the lithium social media ecosphere, and some mad women as well. Anyhow, one of my favorite lines from that, and a concept that is now my mantra as first half ends and second half begins, is it's time to change the conversation. If you don't like what's being said, change the conversation. That is what advertising is all about. And the main narrative that has dominated so much of discourse has been price. The price is going down. The equities are getting crushed because the price is going down. But now it's time to change that conversation to fear. And that is fear of shortage in this battery arms race. Everybody's forecasting a shortage by 2025. Some say sooner because of the expected demand, and if that materializes, where there's just not enough projects under development, and you need to overfund. You can't just fund just enough to get to that 1 million, expected forecast. You need to fund, 1.4 million or more because demand will probably be higher and supply is unlikely to, meet expectations. So you need to overfund. So 4 to 5 projects need to get funded over the next 12 to 24 months. And that is the focus here on Lithium-ion Rocks, and very much part of the presentation that I gave at the Advanced Automotive Battery Conference last week, which I shared on LinkedIn, which was entitled The Geopolitics of Lithium, National Security of Lithium Supply, with a heavy focus on U.S. supply security, and also in Europe. So we talked a bit about Piedmont lithium. We also talked about Savannah and Infinity. And then also lithium power in Chile, and overall Chile-U.S. relations, historic, very strong relations, compared to kind of this movement to China. Panera's bread is buttered by China, but and SQM, potentially, in play. So that thematic is in the ecosphere, and I shared that. But we also have the Mr. Market first half scoreboard, and that is something Rodney and I are going to talk about for, 15 minutes or so. And then we have a final, we recorded Loop Capital's Chris Kapsch for Albemarle, and we shared that in the Southern Accents Part 2. But the other half of that interview, or a third of that interview, was, to talk about Livent. So there is a thematic here, dead or Alivent. So listen to that at the end of the Mr. Market banter between Rodney and I. It is July 3rd. Just before the long weekend. Rodney and I have been traveling a fair bit. I was in San Diego last week after we were jointly in Santiago. But we published the Mr. Market Lithium Bull Scoreboard at the end of the first half. And I'm going to just comment on a couple of highlights and lowlights. We believe the market overall was down 9%. The aggregate market cap of all the companies covered to about $21.5 billion. That is lower than the annual CapEx budget for Exxon. I always like to say things like that to put the tiny lithium market in context. But that $21 billion is about half the size of Tesla's market cap, and the ecosphere for Tesla discourse is much, much, much bigger than it is for lithium discourse.
A lot of this also is dependent on our ability to manufacture a lot of cells and make a lot of battery packs. So there's not much point in adding product complexity if we don't have enough batteries. then it's complexity but without gain. So we're matching the product rollout according to the scaling of battery production. That's really the main limiting factor. And then as we scale battery production to very high levels, we actually have to look further down the supply chain, and we might get into the mining business. I don't know, maybe a little bit at least. So we'll do whatever we have to ensure that we can scale at the fastest rate possible. So to this point, we are going to have a battery and powertrain investor day that hopefully this summer, before the end of the year for sure.
But I think, they're very serious about trying to vertically integrate, from mining all the way through vehicle production.
So that wasn't, he said that at the shareholder meeting, mining, we might get, that wasn't a joke, you think? Or?
Yeah, no, I don't think that's a joke, because he had put out these offers before to these small lithium companies. So I think they are serious about it. There are tales of verticalization gone wrong in the past, but I think, Tesla's proven over time that, they've been able to really leverage verticalization to better products for cheaper prices.
If you just listened to Chicago and Saturday in the Park, I think it was the 4th of July. Actually, the 4th of July is Thursday this year. But people dancing, people laughing, and a man selling ice cream. And readers of the Lithium Bowl and my tweets and other various discourse know how much I like plain vanilla. The big negative news for the sector, I think, was Livent's massive earnings miss. And apart from just it hurting Livent stock significantly, it punctured a significant multiple logic for the lithium industry. I mean, to the extent that it's a specialty chemical, you would think it should have, predictable, sustainable earnings. And for Livent to miss, they look just like any other commodity. Andy Holm at Reuters wrote a very good article, as much as I didn't like to read it. And Livent's a significant component of this podcast because we interviewed Chris Kapsch for Albemarle, but also talked about Livent a few weeks ago and haven't yet published that. So wanted to just talk about, Livent was a negative story. Obviously, Nemaska was a big negative story in the first half. Spodumene prices falling has hurt all of the immediate producers like Galaxy, Altura, Alliance, and Pilbara, and also capital constraints in China on Ganfeng side and General Lithium side. It seems slower than expected conversion hurting there. However, in a stock picker's market, which this is, things are moving sideways to down, but nevertheless there are opportunities. And I would say Liontown, a new discovery in the making in Western Australia. People are wondering, could it be another Kidman? Piedmont Lithium was up nearly 100% year to date, and they just announced actually a very substantial $21 million financing with a brand new cornerstone order with Fidelity, the bluest chip companies. So it's a tough market out there, but selective stocks, I think the wheat from chaff is happening throughout the market. And over the next 6 months, 12 months, 18 months, what we've been trying to identify, are those opportunities of, the smaller and mid and larger companies, but which ones of the small ones are likely to become part of the supply of lithium in the future. And I think in Piedmont's case, the market gave an indication that the Carolina, Tin Spodumene Belt is an area they think likely and worthy of capital. with that summary, I've done a lot of talking. Rodney, what do you think, I guess, are some takeaways of the first half? And more importantly, what should we be looking at, as the second half starts?
Yeah, Howard, it's been definitely an interesting first half. We saw a lot of spodumene coming online from the various producers, and talk of potentially a bit of overhang left over from the DSO that was shipped previously. The ramp up in chemical conversion capacity in China not matching the ramp up in spodumene concentrate, so a bit of a mismatch there. But I guess it also raises the debate whether there is demand for all of the potential chemical production that could come from that concentrate. We are, as you say, it's a week from the chafe. I think that looking at SQM and Livent's indications going forward for the next 6 months, I think it's important to look at the capital structure of each company, who's got cash on the balance sheet, who can survive, potentially a slowish next 6 months. The Chinese EV subsidy adjustments caught everyone a little bit off guard. We knew that there was potential for them to unravel completely by 2020, but there was a substantial cut, and originally we saw demand for EVs in China holding, and then now in May, year on year, only a 2% increase, and against the backdrop of a 17% drop in total auto sales. What is, that now in the last day or two that is looking more encouraging was Tesla's Q2 numbers, and the company suggesting that orders increase more than sales, so net for net they have a bigger order book, and Europe 85% up in May, and I'm not sure but should be pretty solid, albeit a much lower base than China, but definitely going to be supportive. So the other thing, Howard, we've chatted about quite a bit is sustainability and the likely desire for integration of battery supply chains on domestic soil for the various auto markets. So Europe, we had VW stated in its lithium manifesto that they would like to support the battery supply chains on European soil. We've seen them go into Northvolt. We've seen them do an offtake with Ganfeng, and we're likely to see more things happen on that front, and we're seeing a lot of potential battery cell and pack production growth in Europe. So you and I, we both agree. Guys like Piedmont in America, I think spodumene concentrate, a very clean ore body, building to a strategic size, very positive for them, and they are now cashed up. And then some of the European plays, that we also think are positive and are likely to benefit from rising renewable energy. I see BMW has stated that they will look to be using renewables in their production process, so sourcing clean energy. So it's definitely a topic that people need to take note of. And the battery arms race, who's going to secure supply?
I think that's the major message, and again, to the change of conversation that I opened this with, you just saw another article today I tweeted on Bloomberg about, Europe just pulling out China's playbook here. And so Europe is the new China, although you did have some BMW engineer being a bit of a naysayer on the battery demand, but BMW is lagging Daimler and of course VW significantly. So I guess he's talking still his diesel book.
And also hybrids, Howard. I think there's a few manufacturers, Toyota and BMW, are the two standouts that I think would like to kick the plug-in hybrid and hybrid can a little bit further down the road until battery prices come down a bit. The question is, when you decide to make the switch into EVs, the question is, will you get all the necessary supply that you need?
We saw VW have its battery supply contract from Samsung cut down from 20 gigawatt hours down to 5, possibly less, and a misunderstanding. And you've seen them now go with Northvolt to producing their own battery cells. So it is a risky strategy, and we shall see how Toyota and BMW survive under that route.
I was going to say, we say Tesla is not, the story, it's an A story. We say China is not the story, it's a story, and Europe is not the story, it's a story. But, the China story on the demand side has actually seemed to be a disappointment in the first half, right? A lot of, if you look at the exports, out of Chile, most of it is going to Korea and Japan, and you're continuing to see, Chinese product go into the non-Chinese market as well, and that seems to be pressuring both carbonate and the narrowing of the hydroxide price. I don't know when all of that kind of turns around, but on the flip side, you do have this positive news from Tesla. And also, Tesla's major growth is in China, right? So this Shanghai gigaplant, which started construction in the beginning of the year, is very rapidly moving. So apart from the Q2 and Q3 good numbers, I saw this other podcast with the guys who focus very much on Tesla, talking about that conceivably they could have first sales out of that Shanghai plant, by November, December of this year. That's like incredibly fast, and we'll see in China what the take up is for that product. You're right, auto sales in general have decreased. EV sales have increased, although the May numbers weren't great. But we'll see. We'll see how much the trade war has impacted domestic demand in China. The change in subsidies clearly, have had an impact, but I think these are just lumps along the road. It's really, really hard. I mean, if Albemarle and Livent can't really give very much visibility, and we're all still, digesting their first quarter's results, I guess in a month or two, we'll have their guidance for, this past quarter. But it's hard for anybody to give any real visibility on the immediate term, but long term, the demand definitely seems there. All the people who said, Tesla demand is not there, that's not true. And we have a whole bunch of other, cars companies that are introducing products. So I mentioned it in the last podcast, this Volkswagen advertisement. But Volkswagen, again, they popularized the Beetle. They popularized the Golf. If there's any company that's going to popularize, mass market or a $25,000, $30,000 car, I think they have a good chance. I want to, I guess, just comment. There was one announcement, a company no one ever really talks about, is Eramet in Argentina, that talked about. I mean, again, there's always these misleading headlines. It's like, they're going through with the project, but they announced that in December or in the Q4 they will announce whether or not they make a final investment decision. And they also surprisingly said, for a company of Eramet's size, that it's subject to kind of financing, and finding partners, right? So even a well-capitalized big company like Eramet is looking for partners there. But, in terms of projects that we think are going to get into production, this is a private company, so it's not tracked, very carefully by most investors, but it is, a project in Argentina that looks like it'll go ahead.
We saw when we were in Santiago that Chile is definitely looking to open up for business again and get back, and grow on the lithium map. But I mean, Howard, I think some of the key distinction is projects that are ready to go. You always talk about 20,000 tons, 20 years, 500 million roughly capex, and the truth is, in terms of projects that are are completed, have definitive feasibility and very robust, economics and NPV and accurate cost assessments and what have you. There aren't as many of those as people think. That's the truth. There are a lot of earlier stage projects. So I guess, long life projects that are ready to go and that will come on stream when we're likely to see a major uptick in demand are, of course, appealing. So
it's a very good point, Rodney. It's a very good point. I mean, there's a lot of lament out there. Whereas, and I'm part of the more investment is needed in the sector, more investment. But the reality is, there are very few projects that were at a stage where they could be fully funded, right? There was Nemaska and Bacanora last year. Nemaska was late, Bacanora was late, but both of those look like they're now going to get funded. We'll see on Bacanora, but that is definitely a second half thing to focus on, as is whether or not Nemaska gets funded, as is the who can it be now, Pilbara process. But, other than Sal de Vida, which is at a definitive feasibility study, there was Eramet, and, now Maricunga,
Lithium Power now.
Maricunga at Lithium Power, they're ready. I mean, they need to be permitted, but, they're at definitive feasibility study level. But if you look at all the other projects out there, Ioneer's Rhyolite Ridge was only at a PFS. It's not like they were ready to fully fund. I mean, they're going to get there. And other projects, whether it be Thacker Pass of, Lithium Americas, I mean, that was at feasibility study, but then they ripped it up and, are doing, a different way. But a company like Neo Lithium, right, that's a pre-feasibility study. It doesn't mean that it can't be partnered with or taken over.
No, I mean, they're on it and they're doing all of the necessary work. But the truth of the matter is, it's a project we think has potential. But in the end, you need to have a completed, hard, firm pricing on capex and finalized and permitted and ready to go. And the truth is, there's not that many. Even for Pilbara, you've still got to find someone who has done the feasibility on the chemical plant side. They've done feasibility on the spodumene side, but the guy who's going to buy the minority stake needs to do his numbers and finalize those.
That's right. So, if you're going to fully fund and try to get a project into production, I mean, you have to go to definitive feasibility study, right? If you're going to be acquired, right, you don't, as a junior, you don't necessarily have to go to definitive feasibility study. Ultimately, the acquirer, will do that. But, you saw SQM come into Kidman early. You saw West Farmers, take over Kidman, even before, full DFS. So those things are, that's possible, but trying and assuming that, a company that's at PFS is going to have is going to fully finance, right? That's unlikely. They might have a partner, right? Millennial might find a partner for, a part of it. And we'll see. But as I look at the landscape, of the world, I still see a lot of overhang of Argentina political risk. There are a lot of brines in Argentina. Brine companies, do need to. I mean, more brines need to be, part of the mix. But the question is, how many, right? You have Olaroz and Cauchari, and both of those have expansion, capabilities. Both companies are articulating. Hombre Muerto, Livent is aggressively expanding there. So like how many new brines, right, between Chile and Argentina are going to get funded in the next, 12 to 36 months? I think maybe one or two, right? Maybe three. In the rest of the world, I like you were saying, I do believe that Europe, should have some deposits for a security perspective and also just from a green sustainability perspective. I think, North America, in the U.S., most likely North Carolina. I to our point that we just made, there haven't been a lot of projects that are ready to be fully funded, but a number of them, should be over the next kind of 12 to 24 months. And I believe that this shortage that could happen as early as 2023 or whatever the number is can certainly be averted if we get this investment over the next 12 to 24 months. So,
But that only sort of covers you. I think I would disagree, because if you look at the track record of ramp of hard rock to chemical and brines, you won't make it even if you invest by the end of this year. A brine fully funded by the end of this year will make a marginal impact by 2025.
fair point.
Historical precedent given, you could get a bit better out of hard rock. What I'm saying to you, Howard, my problem is, let's say demand is 1 million tons in 2025. In 2026, it's 1.2 million. There's 200,000 tons. Now, do the maths on projects. Are you going to fund 8 to 10, 20 to 25,000 ton a year projects? I can't see it.
Yeah, I don't have all of that math in front of me, but I'm thinking 3 or 4 projects that are not currently like kind of in construction need to be in construction within the next, kind of 12 to 24 months. Things that are already in construction, like Wodgina and Kemerton and Kwinana, which are also scalable, right? These guys are saying if the market's there, it'll be 40,000 or it'll be 60,000 or it'll be 80,000, right? So those mines, Greenbushes mines, the Wodgina mine, the Mount Holland mine, I mean, these, I am hopeful, right, that they will, one, they'll be funded, 2, they'll get into production by 2022, 23. So by 2025, those projects combined with hopefully, Livent at Hombre Muerto or Cobre, we'll see if LAC and Ganfeng are on time and if they enlarge that. And if we'll see, if SQM and Albemarle's expansions are happening by 6 years from now. But it's the new ones. It's the ones that are not yet kind of funded and are going to get into construction that I think for a diversity, geographical diversity, a type diversity, a sustainability close to people. As the projects have advanced, the knowledge about the market and different projects are advancing, and they're coalescing, around, certain parameters. And Volkswagen, as we talked about many times, has planted a flag, in hard rock to hydroxide, locally sourced. I wrote in this this presentation that I gave at the battery conference, and we've talked about it as well, that I'm not sure how sustainable it is to be so reliant on Chinese suppliers like Ganfeng or Tangxi, because ultimately, if there is a shortage, I imagine those companies are going to feel obligated to serve the Chinese market. So and the Chinese market is not just Chinese consumers. There's lots of foreigners inside China as well. But it's important for Western OEMs to have non-Chinese sources of supply, and that presentation I gave showed that China has moved to now control nearly 60% of the available lithium supply. There's plenty of lithium, and there's plenty of opportunity for that to kind of change, over time. But and this is not anything sinister on behalf of the Chinese. It's just that they have been more proactive and forward-looking on this. Europe's catching up. I desperately hope America, and I keep pounding the table, I think it's a Make America Great Again bipartisan issue to be supporting high-end manufacturing in the United States and advanced mining. This is an industry that should have both Democrat and Republican support. It's becoming a topic already in the Democratic debates. We heard the word autonomous vehicles, come out of, the mouth of one or more of the candidates. And so, again, America is behind, but people aren't giving high expectations for it. So there's upside surprises potential to come out of America. In the meantime, we do have the leading company in Tesla. And so much of this thematic is driven by politics, right? In China politics, in Europe politics, the U.S. politics has kind of been, sideways on this, but I'm optimistic that we'll get on board here, and therefore there's going to be other opportunities. I think a very uncommented. I'm surprised at how this Bacanora Ganfeng deal is quite meaningful, right? It hasn't yet closed, but they signed it last week. That's meant to close at the end of this month. LAC is also still waiting for their money from Ganfeng. So just a quality company like Ganfeng is still quite slow in their ability to raise money. They're doing deals, but it's not like super quick. But there's a lot of clay, Lithium America kind of Thacker Pass enthusiasts. I think this deserves, if this closes and as I think it will, and if Ganfeng, further funds their share, which we estimated to be $150 million, for this clay project, I mean, I think it's a very interesting, development, but also, there's geopolitical angle here. Can Ganfeng, be involved in Thacker Pass? Is there a U.S. consideration there? But is there kumbaya now with Xi Jinping and Trump? And I'd be all for CATL and BYD, investing in America. I don't see any reason why Ganfeng, couldn't invest in Thacker Pass, or quite frankly merge with Canadian listed LAC. We've talked about that. I think that would be if Ganfeng wants to be the number one, and they've aspired to this, and that's a little bit of a worry, right? Like Luke Kissam was like, he just wants to be the most profitable. He doesn't care about being number one. Ganfeng keeps talking about wanting to be number one. In my mind, you can't really be number one if you're not like kind of listed in the New York Stock Exchange and you get that multiple and you have the transparency. And one way that could be done would be to merge with a TSX listed LAC, and then it would be a back end way to potentially be involved in Thacker Pass. On the other hand, why wouldn't Ganfeng, build a hydroxide or carbonate, conversion facility in North Carolina? Hats off to Ganfeng's management. I mean, they are writing big checks into their rights offerings, so there's skin in the game there. They're an ambitious company. I worry a little bit. Are they overstretching? Right? They're very aggressive on an Argentina expansion. In brine. They've not done that before, and now clay in Mexico, not done that before. But, they're also in solid state. They're also in batteries. They're a very diversified company. But it's just hard work to get to the bottom of what's happening there, from an English language financials perspective. And then, the accessibility of management is not what it is, for others. Talking about various train wrecks, they kind of showed, where the low cost producers of carbonate are, right? And I think it was making an argument, that Livent and Lithium America, like Ganfeng's in Lithium America, is because there'll be low cost carbonate, and then it showed, on the right hand side, the high cost producers are the consumers of, Chinese, Australian spodumene. Right, so it didn't say in that